Aniruddha Sarkar from Quest Investment Advisors, who is joining in with us to discuss just that, his top sectoral bets, what is he watching out for. Mr. Sarkar, good morning. Thank you so much for joining in with us. What are we watching out for? This week has been really good in terms of markets, so finally seeming that maybe some bit of a valuation correction would come in. That doesn't seem to be playing out. India has been quite resilient, at least this week. Now, in terms of valuation, what are you watching out for? What are the sectors? What is your outlook in terms of the market?
Yeah, hi, good morning. So I think, as you rightly mentioned, I think, definitely India has been extremely strong if you compare it to the rest of the world. But within that, I think what is helping to keep the markets up, or I would say what is helping the stocks to do well, is the pure fact that earnings are coming back. And that has been something which has been a big concern for our markets for the last couple of months, or rather, I would say for the last 6 to 9 months. Earnings was the big, I would say, the negative surprise, which kept the markets low. And after making a high in the month of September and October, I think, we are yet to go back to the old highs, but the way the markets and the earnings are shaping up, and thankfully with the way the international macros are shaping up, I won't be surprised if, investors are in for a positive upside.
Aniruddha, good morning. Thank you for joining in. Now that we are at the cusp of another earnings season in just a few days from now, what are the pockets that you are watching out for that can spring up a positive earnings surprise this time around? Because for a lot of these experts that we speak to, they mention that the earnings recovery is still a couple of quarters away. But do you believe that this quarter will see some positive surprises?
Absolutely. Like, if you see the last quarter, after almost, I would say 6 months, for the first time, we saw good amount of earnings upgrades in different companies in the last quarter. As we begin FY26 with, from next month, we will have the first quarter FY26 numbers coming in. I believe that you should see some more earnings upgrades for good companies where I would say investors should keep an eye on. Now, having said that, a market is always going to reward before the actual numbers come in. And to some extent, you are seeing some of those price actions also happening in different companies. And this is partly because of the numbers which are coming. You can say the business updates or the IIP data or the macro data. Now, if you talk about sectors where I believe the biggest positive surprise can come, you have a very good indication in the capex numbers. Now, if you see the whole of last year, FY25, the big concern was capex was a big drag. Partly you can blame it to elections, and partly you can blame it to the base effect of FY24. Capex, for the private capex, for the first time, the private capex has been more than the public capex in FY25. And this I'm talking about in absolute numbers. In percentage terms, yes, public capex has outperformed the private capex, but in absolute terms, the private capex has done better than the public capex. Now, this is going to get translated to all these companies who are supplying to all these companies where the capex has been happening. So I'm very bullish on the whole industrials and capex piece as a whole. Within that, power sector is one big focus area for me because government capex and private capex is almost at all-time high in this particular area. As of yesterday, if you see, there were a couple of news items also with regard to different companies supplying their products to the government agencies. I think this is something which is a multi-year play.
Okay.
Apart from that, I would say something which continues to do well is your aviation and hotels.
Okay.
Again, the other play which continues to do well is your capital market play, and that's a very big opportunity across different sectors.
And this is capital market, despite it running up so much as well. You still think there's value?
Absolutely. I think, the stocks have done well partly because the opportunity size is huge. Now, the thing is, India was always an underpenetrated market when it comes to, equity as a asset class. That has changed post-COVID. We have seen those massive numbers of demat accounts, mutual fund folios, etc., which has opened. But I think if India's disposable income, household income, and per capita income has to grow, there is no way but to see more and more household money coming into the equity market. And that is where your capital market plays across asset management companies, exchanges, platforms, wealth management, broking. All these will do exceptionally well from here on also.
Right. Also, what's your thought coming in specifically on the PSU side, PSU banks? I want to understand that, right? Because we've heard a lot of people say that, maybe now this is where we could see a bit of a run up. So if you had to pick between the financials or the banking side, would it be PSU banks, private banks? What are you watching out for?
It's a very old debate keeps happening, what to buy, private or PSU banks. I would say in the last 4 or 5 years, I have been more biased towards the PSU banks because that is where the value mismatch compared to the private banks was very high. But having said that, I would say that as of today, I'm balanced between the two, wherein PSU and private both can do well. But yes, if you ask me from a valuation gap, definitely PSUs continue to look attractive even as we stand today. Private banks, I think a lot of catch up has happened in the last 1 year, and that's where private banks have outperformed the PSU banks in the last 1 year. So from valuation perspective, PSU banks looks much better, but from a growth perspective, I think private banks might do better than the PSUs.
Private banks might do better than the PSUs. Aniruddha, I was just going through one of the previous conversations that you had with us back in September of last year, just before the market had hit a record high. And you mentioned a couple of names as well. One space that you had mentioned about pharma, or 6 to 7% exposure that you had back in September to the pharma sector. And you had mentioned that you would increase your exposure to this sector. With the impending news developments with regards to tariffs or a potential delay, have you increased your exposure, and if you have maintained that increase, more importantly, and what is the road ahead that you see for the pharma sector considering the news developments lined up?
Broadly, I've maintained my exposure at the current level, which you mentioned. 6 to 7% is what I continue to have. We were evaluating different names out there, but I think we replaced a couple of names by maintaining the exposure. Now, the fact for that has been the reasons which you mentioned, that there has been a lot of the news flow around how the Indian pharma companies will get impacted with what is happening on the tariff front. But having said that, I would say that the way it looks today, I think Indian companies are in a much better place compared to their counterparts in Southeast Asia, wherein Mr. Trump wants to reduce the healthcare cost in the US and at the same time wants to decrease dependence on Southeast Asia. So that is where I would say Indian companies definitely will benefit. But yes, the roadmap is not yet clear. And I'm as of today betting more on the domestic companies, companies which are domestic plays in India.
Okay. What's changed in terms of your view for the IT sector, right? That time we spoke, it was IT still looked decent. Now, you seem to be a bit more underweight on the IT pack. So I'm just trying to understand why so. What is it that has changed for the IT companies?
So IT sector, I think, I have been maintaining my underweight stance for a long time. And to be honest, the confidence is not coming when you look at the numbers, when you look at the commentary, or when you look at the deal pipelines. Simple fact that when there's so much of uncertainty on the home ground for the US and the European companies, how their companies' earnings will get impacted, whether there will be a recession, there are talks of AI impacting the jobs. In fact, if you look at the jobs data in the US, that is quite alarming. So I would say that all this is definitely giving a lot of concerns for Indian tech companies that where the growth will shape up moving ahead. Having said that, valuation is something which looks attractive on the IT companies, but only concern is that growth needs to pick up. Pipeline needs to look much better. Until that happens, I would remain underweight on IT.
Remain underweight on IT. Of course, they'll be the ones that will start reporting results first up. One final question from my end, Aniruddha. The other one is autos, right? There have been plenty of chatter around it with regards to the tariffs here as well. Now, as a looming tariff deadline, of course, there is a bit of sluggish demand trends that you're witnessing back home as well, with passenger vehicles, the entry-level cars still struggling, the two-wheelers also being neither here nor there. Where in the auto sector does your preference lie? Within the four-wheelers, the two-wheelers, the tractors, commercial vehicles? Where is your preference?
So we are betting more on the two-wheeler side and the auto ancillary side, because the auto ancillary side, it actually opens up the opportunities for export. And I think that is where India can become a large export hub. Because as I again mentioned, that if dependence on Southeast Asia has to go down, you need a replacement. And India, with its large auto ecosystem, is definitely one of those players who can take that position. Having said that, in the OEMs, I'm betting on the two-wheeler space, because that is where you will see a bigger opportunity considering the tax benefits which will go into the hands of the middle class. And this is the category which typically goes into buying of the two-wheelers. And on the auto ag side, I'm betting on companies which are into the export side.
Okay. Aniruddha, thank you so much for joining in with us today and giving us an understanding in terms of your individual stock sectors that you're looking at, as well as in terms of the market as well. Thank you so much for tuning in. On that note, we're actually going to slip into a very short break. After the break, we'll talk about a couple of more names that are on focus today, Tata Power as well as Dixon Tech. Why are they buzzing? What's the reason? After the short break.